All right, last time we recorded, it was Finances for Dummies. I mean, millennials, right? And you guys did awesome. By the way, that's our most listened to episode, which is great. And I told you guys that would happen, right? Like before we recorded, or actually it was after we recorded. I said, this one's going to be the best one. People are going to love it. So we're following that same path. And today, Ansley did not know before 30 seconds ago what we were doing today. In fact, sat down and said, I'm sorry, I'm not even sure what we're recording. And then we said, well, we're going to help Laura set up a Roth IRA and record the screen at the same time. So we'll put this up on, I think we use a YouTube channel, and then we'll put it, I guess the best way would be go to The Financial Call and find the latest episode, which will be this one. It'll be called something like Roth IRA demo, and if you two can think of something way more creative than that, then we'll use that. And then there'll be a link to the video. So you could either just listen to this podcast and I'll describe what's going on, or you could also go and click on the link and watch the video. And Laura is recording your screen, right? You've got your laptop here and you're recording your screen.
Yep.
All right. So the other thing, Ansley, we said we're going to set up a Roth IRA, and you said, and looked at Laura and said, well, you must know what one of those is. And so let's start there, right? All right. So Laura, from our conversation before, can you tell us your barely understanding of a Roth IRA?
Oh, no. Yeah. So it's just a retirement account, and I've already paid taxes on the money that I'm putting in.
You got it.
Right.
And it grows how? Tax-free, tax-deferred, taxable? Do we know?
Tax-free, but that's
you got it. Yeah. You got it. Okay, so it grows tax-free. So you put money in you've already paid taxes on, and it will never be taxed again, nor the growth or anything. Never is taxed again. And for people in your situation, tax rate probably isn't very high, so it makes sense to pay the taxes now on that income. And hopefully you guys make more money in the future, so your tax rate goes up, and you get to avoid the taxes on all the growth when you're in a higher tax bracket.
The benefits of being poor.
That's right. Early college, right? That's what that life is like. But let's, okay, so first step, you just pulled up a browser, and we're going to take a look, and I think we decided TD Ameritrade. Is that where we decided?
Yeah, that's great.
Could do TD Ameritrade, Fidelity, Schwab, Vanguard, a whole bunch of firms. We're going to use TD Ameritrade today. And we're winging this, but we're going to see if we can do it pretty easily and quickly, so we can show people how easy it is to open up a Roth IRA and fund it and buy something. It's 9:30 a.m. Mountain Time, which means the market is open. So hopefully we can just actually put money in and place an order and make it happen. Ansley, you're here for color commentary, so throw everything you can at us and just ask whatever
I was gonna
questions.
Ask, can you take money out of this account?
You can. So when you put money into it, there's an order in which withdrawals come back out. Your withdrawals that come back out are first your own contributions. Second, any conversions that you've done. So if you had a regular IRA and paid taxes on it and converted it to a Roth IRA, that would be the second type of money. They call them sources. So that's the second source of money. And then the third one is the growth. So let's give an example. Let's say someone put in $1,000 into a Roth IRA and it grew to $3,000 over the course of many years. That person could withdraw the $1,000 and have no tax liability whatsoever. And the first dollars that come out are that first contribution of that $1,000. So yes, you can. Ideally, of course, your Roth IRA is the most valuable to you because it grows at a better tax rate than any other account. So that's the one you want to leave alone if possible, but it does give you some access to your own money back.
Okay.
You got
Good
it.
to know.
So not a lot of risk here, Laura, in setting this up.
Sounds good.
And we're going to have to figure out a way to, I think we'll try to block out your personal data, or we won't post it, but I think we can get it done. All right, let's go. So just Google TD Ameritrade. Let's start there. So I'll describe what's happening here if you're not watching the video. So Laura has Googled TD Ameritrade, and they want to make it easy. It says open an IRA today. So we could click there, or you could just click on the official TD Ameritrade site. Most of the time, up in the top right corner or top left corner like this, they'll have an open a new account. You see that? You can click there. It's a big green button in the middle of the screen too, where it said open a new account. And then you're going to select the type of account. And right down there, you can see Roth IRA. Open a Roth IRA.
I like the big green buttons.
I know, it's not too bad, right? All right, so then I'm going to move the screen so I can see it a little better. All right, so it's asking you for your personal information. So here's where you'll fill in your name, and I have no idea how we're going to block all this out, but we're going to figure it out. All right, so Laura's filling out her personal info, just putting in first name, last name, email address, and she just sped read the privacy statement. So she
I read every word.
Right. And then continue to personal information. Most of these big firms do it pretty easy online. She's got it. Oh, that was handy that you've already got all your info in there. All right. Date of birth goes in. Phone number goes in. So when you open up an account with a brokerage firm, they're going to make you verify your citizenship, verify you are who you are. There are quite a few laws that have come into place through the Patriot Act and other things that make it so that they have to really check in the background that they're not opening an account for suspicious people or people from certain countries or non-U.S. citizens without proper documentation. And so there are a lot of rules in investing. They have to make sure that you have all that in place. All right, so how will you use this account? They're going to ask you some questions that make you think like, well, is this my advisor? When in reality, this account is very much just a shell, and you're going to make the decisions on it. When you hire an advisor, then you can add them to the portfolio. Some of these firms like TD Ameritrade, Fidelity, and Schwab have advisors that you can talk to, but depending on asset size, you might not get someone that's dedicated. Right now, the point is, I'm just telling you, you're gonna see some questions that make you think like, why are they gathering this data? Part of it is they have to know their customers. There's a rule that they have to know your customer rule. And then part of it is they want data about you, but it's all right. So you're going to say, I'm going to invest long-term, continue to financial information. In the financial information section, the firm, they're going to ask you, like, this is the planning data that they're going to ask you a little bit about. So you'd click like student for employment status. And then that's that. Frankly, you don't have to put in anything in particular. Just make stuff up here if you want. I mean, normally you can change this stuff later if you'd like to put more.
So it doesn't really matter?
Nah, I'm going to tell you what to put in here. Just put like 50 to 99, and then liquid net worth, put in 15 to 49, and then source of funding, just put in it's retirement funds, so you can put that in, or savings, because you're making a savings contribution. That works great. And then savings for ongoing deposits. And then here they're going to ask you a little bit about, are you affiliated with any broker-dealers, and you're not licensed, you don't have like your Series 65 or 7 or 6 of any type like that, so you can say no here. And let's see here. That's funny. This is so much easier for a non-capita person, but this one for you might actually, let's look at it really quick. Immediate employed by, associated with broker-dealer from financial service regulator. Okay, I remember. No. Okay. Hit no here again. All right. So then they're saying sweep of an uninvested cash. There's going to be some cash in the portfolio, and they're just telling you we're giving you an awful rate on that. That's just the way that works. But they call it a core brokerage core position within the brokerage portfolio, and they show you the rates and all that, but you just continue.
Probably not much worse than the bank.
Right. No, it's very similar. You don't put money into a brokerage portfolio like TD Ameritrade for the cash rates. You put it in to buy investments that go up and down.
Right.
All right. So let's see. That's it. So let's hit continue. All right. And then this is saying that you are a U.S. citizen like you said you were, and you agree to all that, and certify the accuracy, all that above, and then you say you agree to have a brokerage portfolio. In this client agreement, they're going to say things like you agree to go to arbitration if you ever have a dispute about, a trade or an order or something like that, rather than just immediately sue them and those things. Go ahead and click continue there.
So I don't have to provide a W-9 or anything.
No, they do it all electronically. So here you create your user ID.
Or should I just do my email, maybe?
Whatever you want.
Yeah.
Most of the time people at brokerage firms like this don't do their email.
Okay.
They just do like a regular user ID.
That works.
All right, so Laura's putting in a username and a password. So far, we've seen about 3 or 4 screens. Most of it is, who are you? Are you a citizen? What is your tax status? What is your financial status? Income and assets and things like that. And then here we're setting up some username and password information. Ansley, what do you think? What questions do you have so far?
Right now, I don't think I have any.
Okay.
Just from those screens, but I'm just still kind of confused.
Great. Tell me why. Tell me what it is.
The difference between just an IRA
Okay.
and Roth.
So while Laura is filling this out, let's chat about that. Okay, so you have 2 different, think of it like if you can draw 2 boxes I usually will draw 2 boxes on a piece of paper. And then the arrows going into the boxes and arrows coming out of each box. And if you have a Roth IRA, you're right taxed on the arrow going into that box. So that money that's going into the box is taxed. And then the arrow coming out of the Roth is not taxed. We've established that, right? You flip it exactly opposite on an IRA. So the money going into an IRA is not taxed. And the money coming out of the IRA will be taxed. All of it. The contributions, the growth, everything will be taxed when it comes out of a regular IRA. So it's just at what time you're going to be taxed, at the beginning or at the end. And the interesting thing is that it doesn't really matter if your tax rate is the same. We did another episode, I think it's actually number 2 or 3, is to most listened, and it's to Roth or not to Roth. And it's all about this conversation between traditional and Roth IRAs. And what we find is that people think, well, if I pay taxes on $10,000 and then it grows to $20,000, then I'll save a bunch of money because the taxes will be on a smaller dollar amount. The tricky part is if you pay taxes up front, you have less to invest to start, right? So the growth, let's do some quick numbers. Let's say that you have $10,000 of your budget you're willing to allocate. That's pre-tax money. Before taxes, $10,000 you're willing to allocate towards retirement. You take that $10,000 and you put it into like a traditional 401k, which you can do that much. You know what? I'm actually going to change this to make it a little bit easier. Because $5,000, you can put more than $5,000 into an IRA. Okay, so you have $5,000 of pre-tax money that you might put into an IRA, and you pay 20% taxes right now, just again to keep life easy. That's now $4,000 to start if you are putting it in the Roth, right? So the race between these 2 accounts, a traditional and a Roth. The traditional has $5,000 in it because you didn't have to pay taxes. The Roth has $4,000 in it because you did pay taxes. Let's say you earn the same rate of return on both portfolios and you double the money over a decade. So a decade later, double each account. That's the same rate of return. You double the $5,000 and it goes to 10, double the $4,000 and it goes to 8. Okay? So the Roth has $8,000 in it, but that's all after-tax money. The traditional has $10,000 in it, but you haven't paid taxes on it. So let's say now you decide to take your full $10,000 out and pay your same tax rate. You pay 20%. 20% of $10,000 is $2,000. So you're left with $8,000. So this is why I get so many questions about this, but it's not a big deal. Like, it's $8,000 either way. $8,000 of Roth or $8,000 after tax from the traditional later. The tricky part is, what if your tax rate changes? Then it's not the same. So if you can get away with paying 0 to 10 to 12 on now, then you're doing the Roth, and then you're avoiding maybe 22, 25 to 30 later. But if you're in a really high tax bracket and you're going to retire, then you probably want to do traditional contributions because you're avoiding maybe a 20 to 30% rate, and you're going to retire into a 10 to 15% rate. And that's how, so it's just, when do you want to pay the taxes? That's all it is. And it's just the front or the back. Does that answer your question?
Yeah, that makes sense.
Okay. So Laura has gone through. She has an account number and a user ID, and Ansley will have to use her Adobe Creative Suite skills to figure out how to block all of that out. And then, all right, so you click on Continue to Funding. All right. So let's see. We want to do, it's been a long time since I've set up an account like this new on the spot to contribute like this. Let's do a express funding. Let's see.
All methods? Or
Account
just
transfer. So we want to do it from a bank. Transfer from savings or checking account at no additional cost. And it says start trading in as little as 30 minutes. Let's try it and see, because I think that's conservative. They'll probably let us do it right now.
Okay.
So let's do express funding. And here's where you'll say, I'm going to deposit from a checking account. And we're going to put $100 in, right?
Yeah.
Is that our plan? Okay.
Mm-hmm.
And then this is a 2000 and 2000. It doesn't matter. You could do either year right now, but unless you're planning on maxing it out, it doesn't really matter.
What's the max for contribution?
6,000 and change, 6,500 I think now this year. I'll have to look at that. But
well, should we just do the 2019 if we can still do it?
yeah, that's fine. So then that'll make it so that if you do max out, you can contribute into your 2019. You can add to 2019 contributions up through when you file your taxes.
Oh, okay.
All right, so Laura's putting in routing number, checking account number. They make you enter it in twice. Put in the bank account name. And they'll make you put in things like the city. It's 2020, it's $6,000, by the way, is your max.
Oh, cool.
When you're over 50, you can put in another $1,000. So that's 7. Something to be clear about here, 401ks allow you to put in 19,500.
Oh,
so
wow.
it's a lot bigger contribution limit. A lot of 401ks these days offer both Roth and traditional.
Oh, I didn't know that.
Yeah, so you can actually have this same decision around your payroll deductions to your 401k, whether you're going to put them in Roth or traditional.
Cool.
All right, so Lars put in the amounts and the accounts, and you say, I'm okay with money being pulled from my bank account. There's a little check mark there.
I had to make sure I had enough in my checking account before this. We're good. I got $100 in there.
All right, so you've successfully funded your account, and they save your bank on file, so anytime you want to make a future contribution, you can. One of the best ways to do that is actually to just set it up automatic for a few dollars, whatever you can do every month on a set schedule. So let's hit continue, and let's see if you don't need margin or options, so you could uncheck those and just say cash account only. Margin is the ability to borrow against your portfolio. Options are derivatives that are super volatile. They move on the price of other investments, so it's probably not worth doing any of that right now. Okay. And then continue. Okay, so then now there's privacy information, delivery preferences, and things like that. They're going to default you to electronic. You don't want to share your information with anybody if you can avoid it. And then you say, I'm good with all those preferences, hit continue. And this is beneficiary information. So typically people will put, a spouse and then kids, and you guys don't have any kids.
Not yet.
Not that I know of, right?
No, not that I know of, so.
Okay.
Hope not.
And then just date of birth is good. You don't have to put in his social right now. And then 100%. And let's get that. Now, you could add contingent. For the sake of today, let's get you at least this primary and click continue. But know that later you can come back in and add contingent beneficiaries, siblings or parents or something after Tyler.
Okay.
If you both were to pass away at the same time. And so you can hit continue there. And it's asking if you want to provide a trusted contact. This is new within the last several years too, where they have to ask if you want to add somebody else to the portfolio in terms of contacting them if they can't get a hold of you. I would say worry about that later as well. For now, just hit continue. This says, do you want real-time quotes? Yes, I want real-time quotes. So yeah, go ahead and click yes. They're going to say it's you're not using this for business use, so click on personal use, and then you're going to have to put in your job title and you called new business specialist, and then
what is the real-time quote?
Be able to say like, what's the price of Apple? What's the price of Microsoft? Okay. And get it immediately within the seconds rather than within minutes. So it's not that it matters too much. You're not going to be trading it super frequently. Okay. Nope. You're not. Okay, so this is asking Laura if she trades on the Commodities Future Trading Commission. Are you aware if you're trading commodities?
I'm not, no.
Okay. And then, so then this is asking if you're anyone accessing the account. It acts as no investment advisor. You'd say no, you're not doing that. So then it's asking you about no, you're good there. So this is asking her just about things to make sure that they don't have any like investment advisors tagged to this account that they're not aware of. Is anybody using this portfolio receiving profits through trading or compensation or off? No. And then they're going to most likely make you click on a couple agreements. These are for the real-time quotes thing. And if you go ahead and click on it and speed read it, well done. Okay, back to the other tab. And then the OPRA agreement.
I'm in college. I'm a really fast reader.
Well done. Exactly. All right. Hit continue. How are we doing for getting through this for you? So we're like 20 minutes in, which is not too bad. Okay. So we don't want a credit card. Don't do that. See, the most difficult part about this is getting through all of their offers and what they want you to do. You're all set. What do you want to do? Go to my account now. Second one. So they're saying, hey, you've got this set up. Do you want to open another account? Do you want to add other features? Do you want to just go to the account? And there it is. So let's see if we can place a trade.
Okay. This is the part I have no idea how to do this.
Well, that's okay. This isn't too bad. I think you'll look at it and realize like, oh, this isn't that hard. All right. So as of not too long ago, Schwab cut commissions to 0 on almost all exchange traded funds and stocks and everything. And most of the firms followed right after that. So Fidelity and TD Ameritrade. So anything we buy, and we'll come up with something here that is not going to charge you a commission, because you don't want to be paying $7 to buy something with $100. You're 7% in the hole, right?
Yeah.
And so we'd like you to start off, not in the hole. But here's how I would do it. I would just buy an index fund, which means that there's no manager inside the fund trying to outguess the market. They're just giving you exposure to the market. And the expense of the fund is very, very low as a result. So that's one thing. And for you being young, I would probably say, let's give you exposure to just all stocks.
Okay.
And let's give you some exposure to small and mid-cap companies as well. So, and this is not, I don't want people to listen to this and think I have to go buy this exact stock because this is not investment advice, right? But this is what we talked about and what you think might work well for you. So the symbol is IT, as in Tom, OT. Just think about that, ITOT. It stands for the Total Market Index, TOT, ITOT. Okay, so here's what you're gonna do. There's a trade button up at the top. And see how it says trade and then stocks and ETFs? Mm-hmm. All right. We're going to go, action is buy.
Okay.
This particular investment is currently trading for $74, just shy of $74. So we're only going to be able to buy one share.
Okay.
And that's okay. This is how I started my kids' accounts. I bought one share, and then each month I bought another share. And so you type in ITOT. And then with it being a very this is a very highly traded investment, means that you're going to execute this within milliseconds when you push the button. And then, well, I don't know if it's milli, but it's less than 1 second. And then on order type, click on just market. Okay, so let's talk about this for just a second, though.
Okay.
Market order means it's just going to buy it within less than a second at whatever price it's trading at. And as long as it's, you can see it's just shy of $74, you have a huge buffer. There's no way it's going to go up above $100 in less than a second and overbuy your portfolio.
Okay.
But let's say that you were placing a big trade and you really wanted to make sure you were getting it at a certain price. Then you would do a limit order. So just flip that over to limit real quick. And you would put in the price as, I want to buy it at less than $74.
Oh, okay.
And then it won't even buy. If it can't get it for less than that price, it won't buy.
Oh, got it.
And a limit sell means I want to sell for at least a certain price. And if it can't sell for at least that price, it won't sell.
Oh, okay.
So limit can control the price at which you buy and sell.
Cool.
The other one, let's just quickly mention stop. So a stop order is the opposite of a limit order. If it goes too far, it will act. In other words, like let's say that you have this stock and if it drops below, this one in particular, if it drops below $65, you want out. You can place a stop order, think of it as like stop the pain, and you can get out at a certain price. If you place a limit order at $65, it will sell immediately because you're already better than $65 right now, right?
Yeah.
But a stop order won't sell until it gets worse.
Okay.
Anyway, so let's just do a market order. And then time in force means that's how long. So we just want to do it today. It's going to be today is fine. And then just review the order. And it all looks good. And you hit place.
Okay.
Your market order by 1 share of ITOT was received. And now you can, let's see, I look at this on the advisor level, so I'm trying to think about, hit expand order details right there. And then this will show you that, let's see if we can show how it filled. I know it filled already. Let's just go to the history. See that in the top right? History and statements. All right, so transactions, there it is. You bought 1 share at $73.985. It gave can you see that at a little bit lower down here? It shows you the date and the time. It'll 11:57 Eastern time. You bought 1 share.
Got it.
So you literally own 1 share of ITOT
Woohoo!
now. You did it.
I'm an owner.
That's right. Moving up. Okay, let's go to up to the very, very top and just click on My Account. And then go to positions. So now when you go to your account to see your positions, you're going to see that you have $74 in the stocks and $26 in cash.
Cool.
So if you wanted to, I'm sure we could find another fund that trades for less than $26, and we could buy like a small company or something like that.
Yeah.
Or you can just wait till you make your next deposit. And when you have enough to buy 2 shares, you just buy 2.
Oh, okay.
That's what I usually do just to keep it easy.
Okay.
And so you don't end up with all these fragmented little investments that you don't know exactly why you bought them other than you had $23 or $26 in your account.
Yeah. Okay, that's great. So say I'm at home doing this by myself and I want to find one that's valued at $26. How do I find positions?
And this is going to be different for every firm.
Okay.
Let's do a little research up here at the top. So you see how it says research and ideas? Mm-hmm. Let's click on that, and then let's click on, for this is TD Ameritrade, so they have something called the Market Center. So let's go under ETFs. Exchange traded funds are the ones where you can buy them and they trade on the market. They're a basket of investments that trade on the stock exchanges. Mutual funds are different. Mutual funds are not openly trading. You actually give your money to that mutual fund company, and they go buy investments. And then when you want your money back, you place an order, and the fund company gives you your money back, and they sell the investment. So it's
almost like there's a middleman.
Yeah, and I guess technically there could be a middleman in both. The middleman is a lot less expensive most of the time with passive index funds, which you can get on both sides. But ETFs, they just for really small contributions like we're doing, they make it a lot easier. Anyway, so Go to the market center. Let's see if we can do this. So we can look at like what we want. Why don't we search for? Let's go to the screener. There's so many ways of doing this, but let's click on the screener here. And this is going to allow us to say, like, what are you looking for? And can you see how it says create a screen right here? Go ahead and click on that. And then we need to find, so these are all the types of things that you can screen for. So we want to find price in here. So let's scroll down a little bit so we can see price and volume. You see that? Mm-hmm. Current price is the first one. And so scroll up a little bit. We want something you could click on, in the bottom boxes, less than $5, 5 to 10, 10 to 20, 20 to 30, whatever. But 10 to 20 is probably. So now it's showing you there are 243 matches in that. Let's do something with a decent amount of volume. So that means, or a decent amount of assets. So you collapse price and volume here. Mm-hmm. And let's go to overview. And we're looking for something like net assets, or we could use net expense ratio to funnel down to, let's do that and get some index funds. So we want bottom 20% for net expense ratio. Okay, we're only looking at 9 now. Let's take a peek at what we're seeing. So we filtered this for index funds that are trading for less than $20 a share. That's what we are looking at right now. So if you'll mouse over these right here, this is where it starts to get a little bit tricky because you have to kind of figure out what these funds are. Like I know just quickly I can see that you probably have that third one is an energy fund. The fourth one is probably bonds, TIPS. They're called Treasury Inflation Protection Securities. None of these are really there's gold, the top two, Select 500. They could be something you want. They're large. You can see the categories over on the far right, large growth and large blend.
Oh, yeah.
So if you wanted to buy a little bit more large cap stock exposure, I would maybe do one of the top two. The other option is we could go and change the screens a little bit. So let's quickly head up here to modify screen right there. So if we modify the screen, we should be able to come in here and say, well, let's look at the below average as well expense ratio to include more funds. And then let's look at those 24 and see what they look like. So now we've included funds that maybe have a slightly higher expense ratio. So you're seeing on that expense ratio column 0.2 and 0.3, which is still isn't terrible there. Why don't you click on the Morningstar category header? So we're sorting this whole list by the Morningstar category. All right, so here we have allocation funds. Let's go down a little bit and see, like if you have a small cap fund in there, a mid cap value.
There's a mid cap value.
Yeah, I was hoping for just a small core fund, but not seeing one. It's hard because there aren't that many in the 20 and below price range. Go back to modify your screen real quick.
Okay.
And then let's look at, let's add the 20 to 30 group. So there might be one that's less than 26.
Yeah. And this doesn't necessarily need to be for the 26 one. Just in general, how do people come in and find?
That's it. This is it right here.
This is the way to do it. Okay.
Yeah. So you can filter and look for anything. So another way of doing this would be instead of net expense ratio, you could unclick there and then click on index ETF. And it's only going to show index funds now. Okay. And then why don't we go to portfolio here? I'm just going to show a couple other screens that you can do. So you could do, it gives you turnover and valuation and growth. That's not as helpful. This one, I do exposure at the bottom. There we go. I was thinking you could say, I just want US funds. So under regional exposure down below, you could do North America and narrow it down to US if that's what you were after. Or you could say tech. Tech is a pretty high growth. You're pretty young. That'd be an area, a lot of young people tend to really focus on that and feel pretty comfortable with that. So now we need to modify these screens. So you've added them, but we haven't told it well, how much tech exposure does it need?
Oh, okay.
So in the last screen there, say at least half. So click the top or the right 2 boxes. Well, for North America, sure, that's great too. Do that. So click on that one and then a greater than 75. So right now, Laura is in here. She's added some screens like add North America, add technology, and saying like this fund has to be more than half in the North American region, and it needs to be more than half in tech. So click on those 2 for tech.
So the screens are just like filters.
Totally. They're all just nice filters.
Okay.
So click on greater than 75 for tech as well. So we're getting, okay, so now let's look at these 14 matches. Now we've gone through and we've said, give us index funds that are tech funds that are pretty low price. And so this is an area where if you said like, I don't know your belief system, but a lot of young people tend to think tech's going to take over the world, right? And so, because you're just very accustomed to using technology,
yeah,
you could click on anything in there and do a little research on some of those funds. And for most of those are below $26, you could buy one of them. And you could kind of have your 2-fund portfolio where you have US, by the way, that fund you bought, the ITOT, is 75% large cap.
Okay.
It's about, the other 25% is about 2/3 mid and 1/3 of that is small. So it has a little bit of everything, but it's mostly large cap.
Okay.
And so you could add like a small cap fund, or if you said, I want to do some tech in here, and you could find one of these that you like, buy it as well. And then you have 2 funds in the portfolio. You know, you have a diversified thousands of stocks in that ITOT. And then you have this little emphasis on adding tech to the portfolio.
Cool.
That's how you do it. Any questions before we wrap up? So last time we talked very conceptually about like, hey, how much life insurance, how much emergency funds, how should you think about Roths, traditionals, saving for retirement, paying down student debt. This was much more zeroed in on, okay, you've decided you want to open a Roth IRA. How do you actually get it done? And we spent a lot of time just chatting. I think someone could have done that in 20 minutes.
Oh, yeah, for sure.
Yeah, that makes sense. Well, great work. Congratulations.
Thank you.
First brokerage Roth IRA.
Roth IRA.
And a whole bunch of stocks, thousands, right?
Yeah. No, this is great. This is really helpful.
Nice.